Silver plunged 15% in a single session. Gold dropped 7%, threatening the psychologically critical $5,000 level. Platinum and palladium followed with double-digit declines as well. So this was not random volatility. This was a structure that was breaking. And let's take a look and see if we could explain what actually broke, why this move happened now, not later. How to understand and realize that this was predictable. And how professionals positions after a crowded trade unwinds. So let's take a look at the raw damage first. So silver fell 15%, slicing straight to the psychological $100 level that mattered not because of its fundamental, but because everybody believed in it. And there's a lot of psychology in everything that we do here, I have to say. Gold shed 7%, one of the worst single-day moves of the year, away from 5,000. Platinum fell 14%. Palladium dropped 12%. So this was just a gold thing, right? This was on the rotation. And it doesn't necessarily mean risks off. This was a forced liquidation across the entire precious metal complex. And when everything falls together, you're not looking at fundamentals anymore. You're looking at positioning stress. One thing you need to realize is that very often statistics are basically statistics assume that one event is untied to the other. That's how we're able to predict that if you're going to flip a coin, you're going to win 50% of the time. So that means that there's only two sides. So yeah, the odds of winning is 50-50. Have you ever done it? It doesn't work that way. You could be winning for a long time or losing for a long time. Why? But because the way you spin once impact the way you spin the second. And when you look at the stock market with the beta measuring events that are uncorrelated to each other, the beta measures the unsystematic risk, basically risk that just remains. Everything else has been removed. You're basically measuring inflation and things like that. But at the end of the day, if one stock moves, you assume that another stock is not going to be drawn by it because otherwise it's chaos and you can't predict anything. Exactly. And this is what happened. One, silver, gold, palladium, they got together. So that's the reason why I said that this was a forced liquidation across the entire precious metal complex. You're looking at positioning stress. Slow down because this is where most retail investors misread the situation. When you look at the metals chart, do not start with the price. Start with the slope, the velocity, the distance from the trend. That is what you need to do. The angle of ascent steepened dramatically, signaling momentum traders pile on, no long-term allocators. When price pulls too far above its long-term moving average, this chart is no longer about value. It's about leverage and emotion. That's exactly what we saw. That wasn't gold rising because inflation expectation was steadily compounding. Yeah, it is a fact that there's a concern about inflation. I did a video on that you could see all the ETF inflation driven. We talk about that every day at between 8 and 9 with my members. I say, okay, what's going on? That's what I'm doing. I've been, obviously, because I need to make some money, I'm more specific with my members, what I'm actually buying. How do we benefit? What we're trying to do is basically, find the peak of the market, get out before, make money on the way down, the way Spitznagel and these guys did with COVID, 4,000%. And then when it's down, you buy again. So that's a lot of work. But don't become a member so you could say, well, some actually contacted me and said, "Can I see what you have?" I said, "No, you can't do that. You don't know what my portfolio is. You don't know my risk tolerance. You need to understand. This is teaching, right? I charge $10,000 to teach, right? So for you, because there's a bunch of you, so I'm able to split it out. It takes time. It's not easy. So that is exactly what we saw: leverage and emotion. That vertical acceleration in silver in early 2025 was unhealthy. It was exhaustive. The angle of ascent steepened dramatically, signaling momentum traders spot on. And of course, leverage and emotion. And that's exactly what we saw. This wasn't gold rising because inflation expectation. Everyone already owned it, and that distinction is everything. The collapse, this perfect storm, I guess, the collapse wasn't caused by one event. It was caused by three forces hitting at the same time. First of all, after a record breaking year, gold was up 65% and silver 150%. This was no marginal buyer left. Just like AI tech stocks, the meme stocks, the crypto, right? When everyone leans the same way, liquidity disappears. When sentiment flips, the exit door doesn't close slowly, it slams. You're all trying to get out of the movie theater at the same time. There was the Trump Fed chair situation, right? Markets are forward-looking machines. So right now they are pricing the possibility of this new Fed chair coming in and doing this thing, a more dollar-friendly monetary regime. But that's just, you don't know, a shift away from the relentless debasement narratives. But you don't know because the president basically says that he likes a cheap dollar. And this is good for emerging market trades, believe it or not. What does that mean, a cheap dollar? It means that the dollar, is weaker compared to other currencies. Yeah. So if you are in Europe and you are buying dollar denominated goods like a car, it's cheaper for you to buy. The car is probably a bad example because nobody in Europe is going to come over to buy a car. But the point is, if you're buying anything in the US, it is cheaper. So therefore, you buy more of it. And this is good for the US person selling you that good. So, but be careful. If your dollar is too weak, no one wants to hold it either. And that's kind of the speculation. But that's because there was a big news, the Fed chair, and there was a big news, the gold and the silver going down. So they say, oh, they got to be tied together. But there's thousands of other things that happen during the day besides that, which you didn't pay attention. How do you know it's not tied to the other one? You don't know. You never know. This is what Aristotle says. I know that I never know. You have to understand that. And Aristotle said it, and Taleb Nassim says it in his book, and a bunch of other people. And I say it too. So the second reason, besides the Trump thing, was a geopolitical fatigue. Venezuela, Iran, the shipping lane, Greenland, right? But markets don't price fear forever. Eventually, risk premiums decay. And once the US dollar stabilized, even modestly, the primary tailwind for metals disappeared. Meaning that nothing is, we're not going to do these things. We're not going to invade Greenland, right? That doesn't make any sense. So why are we holding gold for that? I think we went too far. Hold that thought. Let's see what happened with Iran. And then, of course, the miners, ETF, and the leverage trap. Now, let's talk about what the real pain is. Mining equities didn't just fall, they bled. And in fact, in my Patreon channel, which I share with my members on YouTube, I also showed you this regime shift bubble. And I said, be careful. Newmont Gold, be careful. Bloomberg Index, gold indexed. before the event. Why, right? Because miners are leverage expressions of the underlying metal. Simple as that. An ETF, even worse. Some collapsed 25% as liquidity evaporated. This wasn't selling, this was forced unwinding. Now, why was this predictable? Again, this is not a failure of gold or silver as assets. This was a failure of timing, concentration, narrative-driven positioning, and every major collapse in market history shares one trait. The story becomes consensus. And when the story becomes a consensus, returns go to zero and risk explodes. So, what is the smart money going to do next? So that's what professionals like me are watching now. Does gold hold its long-term trend or slice clean through it? Does silver stabilize, continue to deleverage? And do miners decouple or remain capital destructive? Smart money doesn't chase rebounds. It waits for volatility compression, sentiment capitulation, structural support confirmation. That is what we do. We want to know what's going to happen next. Only then capitals re-enter. So this isn't the end of precious metals. But I think it is the end of the easy trade. The next phase, which I tell that to my members every day, is discipline, risk management, and patience. Risk management, not narratives. Risk management. No, not tell me what's going to happen next. You need to understand what is going on. If you don't understand what's going on, then forget about it. It's just entertainment. And please, 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 don't fall for, AI bot-driven apps that will tell you what to buy and what to sell. No one knows. No one knows. But yes, everyone is trying. So two things very important. Remember what you want to do. You want to buy when everybody else is selling, and you want to sell when everybody else is buying. I did some buying, believe it or not, and I showed that to my Patreon members after the drop. I bought. Second, you need to understand that this is not about making money. You look how much money you made in gold, right? Look how quickly you lose it too. So it's about the downside. We want to look for the downside. Now, it's not popular but don't you want to make money? That's not the point. You need to make sure you don't lose any. That's what the focus should be on. And you could make a lot of money doing that. I made 20% with a trade when they thought that Trump was good, that the U.S. was going to invade Greenland. That volatility alone by the right instrument can make you, you have to be on top of it. And you have to understand it. It's important. You need to understand the risk and you need to understand the instruments. And also, one thing you have to, and I'm going to keep repeating that, just because something happened and this other thing happened at the same time doesn't mean that they tie together. No, they tell you that, and then you believe it because you say, that's right, there's a bunch of shining lights here and a bunch of screaming here. It's like saying that, look, every time there's a fire, there's a fireman involved. Well, they must be causing the fire then. It's the same thing.